Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Quick programming note, next week, do not look for the Cattle Call until Friday, as I'm going to be out of the office for a few days. So we are going to delay it just a few days, so don't panic. It will be here, but we will just take a few days to get it sent out to you. Maybe it'll give the market time to get themselves all straightened out during that time. We're going to find out what's going on in this trade today. What about these cattle kill threats that continue to resurface over and over? We're going to talk about the export opportunity. What's going on within the boxed beef trade? Is cash encouraging? And more importantly, let's talk about this game of futures. We've got a lot to unpack today with Brad Kooima. And don't forget, the grilling season officially kicks off on Sunday. So, Brad, lots of going on, but we got to start out, unfortunately, with a negative. When you hear stories surfacing that cattle kills are going to be cut, we get a quick reaction within the trade.
Well, we sure do. Susan, thanks again for having me on. I always enjoy it. And yeah, let's go ahead and start that. Try to unpack that. Trying to think about how to put this delicately. I do think. Kill cuts typically are reacted to negatively by futures because the fear is that, well, if we're not getting enough cattle dead, that we would be backing up the supply, losing currentness, which is, I can't argue with that statement. However, what if it's because there's less cattle? 2014, we ran 32 hours for months. That's what happens when you get tight supply. Somebody's going to go without. I think the Packer's in a terrible conundrum here. A Packer's going to want to still be viewed as a reliable supplier of meat, right? I mean, he's got customers. So he may not like his margins. But what's he going to do? Take a chance that you're going to, and a lot of these contracts for union is 40 hours a week guaranteed. So you can talk about cutting 32 hours for a while, but is that really a realistic good business model? I don't think so. So I'm saying, not that I feel sorry for them at all. I think they just got to, they're trying their best to throw a rope around this thing. Here, speaking of the poor guys and their poor margins, where do you think we were 4 years ago? Remember that stuff?
Oh, yeah.
95-cent cattle, $400 boxes. Maybe they should have saved a little of their margin then. 95-cent cattle, right? Okay, I'm not over it. I don't think anybody should be. We told the story about the guy that got price fixing fine because he sold toilet paper too high. I mean, I don't know what happened there that we didn't sell beef too high. But back to the subject at hand. I believe that we got misdirected with a couple of reports last fall, the October-November cattle and feed report that gave us all this impression that there was this big wall of cattle in the first quarter of the year. Well, guess what? The first quarter is over. And officially for the first quarter, we killed 4.9% less at a time when we were supposedly going to kill 2% more. Nobody's going to make me believe that we've carried those cattle into May because I see what the show lists are. Look at the show list this week. Very, very small. So, I guess, they can talk kill cuts and hey, if you're not going to talk your position, nobody else is going to do it for you. But I really think that we're going into a supply that's tighter than expected. And we have a bit of a dysfunctional futures market here with the huge discount that we have. Early indications on cash this week still make me think we're going to be higher. I haven't changed my mind. The longer we wait, usually the better it gets, Susan. So I don't know. We're going to sit up here and ask 190 in the north. We might not quite get that, but I think we're going to get more than 187.
Which is interesting that, we see the South already. Earlier in the week, they were already taking bids and offers. And the North has been the one that's been going to say, hey, we're going to hold out, even if it's Friday afternoon, to get anything done.
So my brother sells a lot of my cattle and a lot of other guys' cattle up here. That's what he does. And his theory is always that the longer it takes, the better it is usually, which would show you that the feedlot's got some guts, right? If you're better sell it to the first bid, in that, no leverage, perspective. That's the dynamic. It's leverage. And if you could measure that somehow, man, we wouldn't need anybody else, Susan. We just open up to go to the bank on Friday, right? So that's the position I believe that the market is in. Now, I wish the weights would come down. They were unchanged from last week. They just came out here a few minutes ago. But I guess I understand why. Weather's good. Feeder cattle are high. Feed's cheaper than it was. And actually, these cattle don't all make money. In fact, I have as many closeouts in the red right now as in the black. So it's not like this is a runaway no-brainer by any means.
So let's look at the fact that packers still need the cattle. Boxes all coming together. What is your takeaway on that and how that's going to end up kind of bleeding into consumer confidence?
Well, I might be the first to admit I'm just a little impatient that these boxes haven't been a little quicker to rally here. It's buy your mama New York Strip Day on Sunday,
Yeah.
and that's usually, like you said in the prelude there that that's gonna be kind of the kickoff for the grilling season. So I guess I got to believe it still is. Rode by the sign of our local grocery store. They got those lighted signs there out advertising choice ribeyes for $10.99. I mean, I think that's not high priced at all compared to where we've been the last long time. So I got to believe that the system will work out. And the trouble with that demand thing is you keep talking about it, not you, but I mean, we talk about it to the point where, gosh, I guess maybe it is high. I mean, could we talk about your $6.50 cup of coffee? Could we talk about it now? It costs $200 a month to watch TV because you got to have all this stuff, like Amazon, Hulu. I don't even know what this stuff is, Roku, whatever. Just let me watch the Twins, right? I mean,
Yeah.
So it's what it is. I still think that you're going to have a core amount of people that are still going to go ahead and eat this stuff. So I don't know, just got to try to grind it out, be a little bit patient. We got a big fund roll too. It's day 3 of the roll. So that's some of the extra pressure in the June, but that should subside here in the next day or two.
All right. The bear in the box has got to be this futures and the game that continues to be played. I mean, I look at Thursday morning, we had some higher numbers. Within 20 minutes, everything was tanking. It's come back a little bit, but not good.
The market, I defend the futures markets, what I've done for 44 years, right? I know there's some stains, of course, but I don't know. I mean, in fact, I'm going to have the opportunity, which I appreciate, next week to me and a few other people from Iowa are going to, and maybe a couple from Nebraska too, by the way, visit with some of the muckety mucks of the CME to talk about what's going on with this contract, that it doesn't seem to, well, $11 under what cash cattle are in the north. That's where we are in June. Now, I know it's not June. I know it's not the July 5. I know all that stuff, guys. And I understand how this works, and we are always a discount, but not 11. The old days, you'd even have a commercial would say, well, I don't really want to pay 187. I don't really want to cut kill because I want to make sure Hy-Vee will still buy meat from me. Why wouldn't I buy futures at 176 and wait for convergence, and either the futures rally or the cash comes down? And but even the commercial doesn't seem to have a lot of confidence that you're going to get convergence on a timely basis with the futures contract. So I don't know. I hope we can talk about some things like maybe improving the grade of the contract, maybe changing some of the feature, like the reclaim feature. Maybe even trying to figure out make a rule or two that benefits the long speculator instead of the rule that benefits only the hedger. So we'll see. At least there's some dialogue. I don't expect the world to change, but keep working, because the market, there's more people that feel like we're not. The market's job is to provide a relief function, right? I mean, and when it doesn't even seem to relate to what's happening in the cash market, I would think the CME would be a little concerned.
All right. Well, I can't wait to hear how that meeting goes. If you can share that conversation with us next week, what you can. What is the best way, folks, to get a hold of you? They want to have more of a conversation.
And I get a little of that too, Susan.
I know,
Thank
it's
you.
awesome.
Yeah, I had a really great call yesterday. Nice gentleman from Texas. Well, we have a phone number, 712-722-0023, but otherwise kkvtrading.com is a good spot to start too.
All right. Thanks, Brad, for joining us this week. Quick reminder, commodity futures options do involve a substantial risk of loss, not suitable to all investors. Again, do note, next week's cattle call will arrive on a Friday to your social media platforms. That's been this week's cattle call on the Rural Radio Network.